The Fed kicking off a two-day meeting. Join us now, Greg Fleming, Rockefeller Capital Management President and CEO. We had the Fed survey that Leisman brought us earlier, Greg, and there are definitely some ratcheting down of GDP expectations, I think goes along with your thinking as well for, I guess, a variety of reasons. You make an interesting point that the real inflation could come when we do onshore everything, and the labor and everything else that be careful what you wish for. Although Scott Bessent said, look, the American dream isn't a cheap widescreen TV. So maybe we pay more for that. But everyone's got a job to buy one, hopefully. Is there something to that?
Well, one thing that Bessent also said that I'm hoping he's still very focused on is 3, 3, and 3. 3% real growth, 3% inflation, and 3% federal deficit by 2028. Let's hope they're still on track for that. But, you know, one of the things about the Fed now, Joe, if we're talking about the Fed, and that's partly the inflation topic, it's interesting that they are on hold, and they're going to need to be on hold now until they see what happens from the events that have been put in motion. So where will the tariffs end, and how much inflation does that cause? How much weakness do we have in the economy from the uncertainty, which you all are seeing every day, both business and consumer now? Some of the more recent polls on the consumer side show the consumers may be starting to pull back, or that's in the early stages. So if you're the Fed now, you are truly data dependent with no ability really to move ahead of it because you don't know what the it is because it's a completely unique time.
Meaning that there aren't going to be cuts that come anytime soon because they're waiting to see what happens?
I'd be surprised if there were, right? Because they've got to worry about, inflation has been on the right trajectory coming down, but there's still more work to be done there. If tariffs end up in a more robust spot and there's inflation from inflationary pressure there, you've got that on one side. And then how much does the economy weaken? You know, how much slack in the labor market, thank you, that do we have? So they're going to be balancing those two things, but they've got to watch the data on both sides before I think they can move. So I would expect them to be on hold for some time here.
To get to 3, 3, and 3 seems like would cause a lot of near-term issues that if you want to get there, maybe you're okay with some of this. You also pointed out we had 2 big years. This is not unexpected, a 10% correction probably. If it was caused by some of these, whatever you want to call them, tough love that we're getting, whether it's from Doge or whatever you want to look at, are you in support of some of this stuff, even if it causes some near-term turmoil, tariffs even?
Well, let me give one answer on the history, and then I'll come back to the, what I'm in support of. In '98 and '99, and we were here. You had the 2 best back-to-back years in history until 23-24, and they were roughly similar in terms of the magnitude. The market was up about 50%, a little more than over the 2 years, and that's what we had in 23-24. So coming out of 2 years like that, you're going to see more volatility. This time, unlike that time, 2000 was the election year. Here you had the administration change. And whatever new administration comes in, there's going to be new policies. So you would expect to see more volatility in 2025 coming in just because of what happened the last couple of years and the new administration. So again, that's something for people to keep in mind here. The other thing that people need to keep in mind is that the market in the last 2 years, if you take out the 7 stocks that we spent so much time talking about, the market's up each of those 2 years about 9 or 10%. And if you take those stocks out now, the market, S&P, is roughly flat. So, there's been a lot of talk in the last few weeks about the, major correction in the market and angst about the market. But there really isn't, when you look at the numbers, as much going on yet as people, I think, are talking about. So it's important to keep it in context. On the policy side, we've talked about this at length here. The federal budget deficit has got to be cut. And the statistic I've been talking about recently, if you go back to 1945, receipts as a percentage of GDP have averaged 17% a year. Spending over that entire time frame has averaged 19% a year. And we obviously had some years even with a surplus. Bill Clinton left office with a surplus. In the 5-year period, 2019 to 2024, receipts were 17% of GDP on average, and spending was 27% of GDP.
COVID.
Completely unsustainable. We have a wealthy country. I still firmly believe greatest economy in the world and will be for a very long time. But we can't afford that level of deficit year in and year out. So they have got to go after that. Whatever party's in power, they've got to go after that. So I'm hoping that they get there with some material reduction in the level of deficit spending that we have in this country.
Right. I mean, I looked at it again, and Trump was under a trillion for the first 3 years, and then it was almost 4 trillion in the COVID year. So all in, it came at like 7. Then I think Biden did almost 3 or just under that.
Up front, right, when he came in on
right.
COVID, yeah.
But then he kept, then it came down below 2, but then the last 2 or 3 years, we went right back up for no reason, other than everything the Democrats wanted. And think if it wasn't for Sinema and Manchin, it would have been 10 times worse. But all that stuff that happened got us back to 2 trillion in deficits. We were under a trillion.
You cannot run on a sustainable basis, even if the United States, a deficit, particularly when employment's close to full, as it has been, of 6 to 7% of GDP. You know, one of the transitions I think they're also trying to make now is all of that spending on the federal side, it's got to come down, and they're hoping to transition to faster growth on the private side. Mm-hmm. And that would be a great pivot if we can pull that off in the economy, a great pivot for us to have now.
No question that spending has outpaced where it should be. But when you hear talk about cutting and coming up with savings from some of that spending and then turning around and giving it back in tax cuts, what do you think of it?
Well, you know, the tax cuts, I mean, the pro-tax cut crowd.
I'm not talking the 2017 return. I'm talking about additional tax cuts on top of that, not paying for tips, not paying for overtime. A lot of things that have some pretty big price tickets on them to the tune of, billions of dollars.
Well, Becky, you're right. They've got to balance both sides. You in the final analysis, when you put it all together, that deficit, and Besant said it up front, 3% of GDP by 2028. They have got to figure out the balance that's going to get there. So I completely agree with you. If there's less on the spending side and you layer on additional tax cuts, even though tax cuts tend to be pro-growth, and that's the argument for them, that's a problem because we have got to take this 6-7%, bring it, and it should be 3% by 2028, and it could come down further from there because you're now already servicing. And Joe and Becky, we've talked about this. Yeah. The interest on the debt today exceeds military spending. And when you look in the world around us and the people you're talking to every day, military is quite important today given what's going on in the world. Right. So we have to invest in the military, reinvent the military. We need the money for that. Spending more on interest on debt than military is, again, another national challenge.
And we're not talking about crazy interest rates at this point, below 5%.
We're not. We're talking about more normalized interest rates. Right. If we get enough weakness, maybe they come down. But they'll probably come down more like they have historically as opposed to what we saw, 4 or 5 years ago. So the interest costs on this enormous federal debt are going to stay very high.
Greg, thank you. These are intractable problems, but you're optimistic?
I remain optimistic. I mean, it's
what else have we got?
It's also still the greatest economy in the world.
No doubt.
The Economist had that cover story with American exceptionalism, the envy of the world, 5, 6 months ago. Yeah. You have that cover story jinxed in Sports Illustrated. So, they put that out there, but there might be a little pushback on that now. But in the final analysis, this is a great economy, a great society. That's
never changing. Yes. You might change the, terrible, the longest bull market in bonds. That's the top, but it's never going to be the top of American exceptionalism. I don't hope.
You and I are on the exact same page on that, Joe. Beautiful. Becky, too. Great to see you both.